Wagwan. It's Dawn on your screen. And well, yeah. So in this video, though this is actually the first of many videos still to come, what I'm basically going to be doing in this video is just, market watching, or we're gonna do what I like to call market watching, which is where now I analyze the chart, and after analyzing the chart, we're gonna sit for maybe like an hour or two, and we'll basically get to see my trading system in action. So if that sounds like something interesting to you, please stick around and watch until the end, because I'm sure you're going to get a hell of a lot of value from this video. Without further ado, let's get into it. So first things first, right off the bat, you can see that we are on the 4-hour time frame of an asset called Volatility 75 Index. Now, Volatility 75 Index is basically a synthetic index that is made up of assets that technically don't exist, right? It's comprised of, or is primarily made up of computer generated numbers. Yes, that's what I was looking for. It's made up of computer generated numbers, and today's the 16th, right? So when it's made up of computer generated numbers, that means that the movement is in a way predictable by virtue of the patterns appearing, but at the end of the day, it's still that randomness factor as to, oh, we don't really know when price is going to turn around, or if this pattern is going to play out the same as last time. But we do know that there is constant volatility, and you are liable to catch a move, right? You might not catch it now, you might not catch it in the time frame that you want to, but you are most likely to catch a move. So in this regard, I am basically just analyzing, and what I want to do is isolate the last 3 days of price action. So 16, so 15, 14, 13. Okay, 15, 14, 13. So, okay, 13, that's our starting date. And that being our starting date, we can quickly come and mark our swing high and what seems to be our swing low for the season, being that, well, it was that for a minute. That was a low for a minute. But clearly it got ran through by virtue of that movement over there. So I don't like to mark out, too much on the 4 hour. I will mark out control Y. I will mark out my swing low and my swing high on the 4 hour. Then on the 1 hour is where things get a little bit more interesting. Because on the 1 hour now we are more able to now scale in and identify our market structure. So for anyone probably watching this video as a completely new, as a newbie on the charts, right? First things first, you need to determine your direction. Where is the market going? And in this instance, we can quickly see that the market is clearly going down by virtue of it just having first of all created that level, and then after creating this level, it continued further down below that level, and we can see that it did try to test the area or the level to continue to the upside, but clearly this was a failed auction, and we can see that there were more sellers in the market than there were buyers, right? So by virtue of that happening, we had that strong bearish candlestick to the downside, and price action just continued down, man. Not a great day for the bulls, but at the end of the day, we keep it pushing. So we understand that this is a significant high area that we could be aiming to see price potentially pull back to, as well as that one. This one is already a given because price is already here. So we don't want to, we can't expect a lot from this area. Or we can actually, eh? we can expect a lot from this area, because now, as you can see, right, just like I'm mentioning, that is this high that was created over here. And now what we're basically doing is waiting to see if price is going to break above this high. Let me do that. Price is going to break above, pull back, retest, and continue to the upside, right? That's what my strategy does. My strategy isolates basically events in the market where price is most likely to break out of an area, pull back, and then expand to the upside. That's what the system does. I don't have a particular name for the system, but just know that my system is based off of fundamental aspects of the market, right? So here we have the potential to see price expand to the upside, pull back to the downside, and continue to the upside. So right now our bias, right, I want to delete that. Right now our bias on the 4 hour is bearish. Right, let me just quickly scroll back up to the 4 hour. Our bias right now on the 4 hour is bearish, right, by virtue of seeing price continue all the way to the downside, but it could be bullish. It could be, but it is bearish right now. Right, the only time I could consider price starting to look bullish is after we break those highs on the lower time frame and continue to pull back and create a lower high, maybe on the higher time frame. But so far, 4 hour is bullish, 1 hour is seeming to be bullish, because now we are coming from this, right, this minor consolidation on the lower time frame. This minor consolidation, we had the sweep of liquidity, and now we could potentially see price break above this high point, right? Like I'm saying, once you see price break above this high point, we then need to wait for a couple more candlesticks to form for us to then be able to continue to ride the trend to the upside. But this is a swing perspective. This is not a scalp or a day trade perspective. And essentially in this session, I want to identify the most scalpable positions possible. So right now I'm just making sure that I isolate the most like conscious event, because I don't want to just dive into the market and now just push, you know what I mean? So right now we're doing our due diligence, and we can see on the lower time frame that number one, prices continued bearish. Number two, prices continually made lows, lower lows, and lower lows. Price hasn't made a higher high in a minute. The highest high we have for now is that high and that high, and price hasn't significantly pushed to those highs. So now we're waiting to see if price is either going to reject at this area, which is very likely, rejected this area and continue to the downside, or see price do that and continue to the upside. Either or is very likely, but right now we scroll down to the 15 minute, and the 15 minute is where it kind of gets a little bit more interesting, because on the 15 minute is where I like to draw my areas of interest. So on the 15 minute, I'm going to switch to the line chart as well, so that I can properly isolate those areas where price really rejected. You see, just like here, you can quickly see that price rejected nicely in this instance right off of that area over here, right? We have price testing over here, and then we have price testing over here, or it almost did. Then we have price over here, and then we have price over here, and then we have price almost at this area, but just failing to. You see, price has been there quite a few times, so we can anticipate for something significant to happen when price reaches this area once again, right? And it could be doing so right over here, but I'm not gonna rush anything. So now we continue to isolate more areas of interest. So we have that over there. What is a significant area of interest? Yes, indeed, because price came here once. Alright, so price come here the first time. First time we saw price at this area was here. Second time was right around here. Third time was over here. You understand? Then we had this mishmash over here. But eventually, price broke back down to the downside. So That's an area of interest. Now we can then isolate the next area of interest, which is probably going to be this area over here, by virtue of that. And we also have that. And we also have that. So, key areas of interest, guys. Key areas of interest. Because you don't want to be taking your trades willy nilly in the market. No, you want to be taking them from a sound area. I might just extend this a little bit because this over here for me just represents liquidity, bro. All I see here is that. I wish I could explain what I see to you guys, but yeah. I want to count this as an area of interest. I really do. But it's just a little too close to this area of interest for me to now say that, okay, it is an area of interest. So that means I would have to do this in order to properly accommodate it because, yes, you see. Now, even if we switch to the bar chart, ooh, oh man, these areas are so immaculate, bro. Look at that. Areas are so immaculate, man. See, look at that rejection over there, then that rejection over there, then that rejection over there, then that rejection over there, rejection over there, rejection over here. Wow, this was a really fucking strong area of interest. This is a really strong area of interest. You see price rejected here first time, second time, third time, fourth time. Did it fake out? Came back. I'm sorry for anybody who was caught in that fake out, but yes, it's market antics, man. So from this point here, I'm really tempted to take a sell position. Really, I am. I'm really tempted to take a sell position. I know we haven't analyzed the market deeply enough, but for me, there's enough confluences that are pointing to this potentially being a very nice area to sell from, right? Because we have that potential of seeing price possibly come back and then come back down. Because like you guys have witnessed, right? Whenever price gets to an area, there's more than likely one thing to happen. Price is going to reject into the prevailing direction. Or sometimes it's gonna break out of and then reverse and continue in the opposing direction. So in this instance, we possibly want to see price reject in the prevailing direction, which is to the downside, instead of continuing to the upside. But it's too many times where I've watched this pattern happen in the market, and you just be like, you know what, maybe let me sell. And then as you try to sell, that's when the market is actually like, you know what, buys are pretty good right now. And it just starts rallying, bro. So, for the sake of the argument, right, and for the sake of lower time frame analysis too, because as you can see that on the lower time frame or 15-minute market structure, price shifted over there by virtue of that break of structure to the upside, pull back with that wick, and then shot to the upside. So clearly we are in an uptrend on the lower time frame. But what I'm marking out is essentially internal structure. And internal structure doesn't tend to hold as significantly, but you know what? It is what it is. So to this regard, I really want to sell, but you know what? Let me buy. Sales feel pretty valid, but by virtue of this doji appearing, I'm not too confident in the sales. By virtue of that doji appearing, I'm not too confident in the sales, so I'm gonna place my buys, and then I'm gonna place my stop loss just below this next candlestick doji, right? And then I'm going to target those next highs. Yeah, I'm gonna target that area over there because we want to see price possibly move from that zone all the way up to check there and then continue up for it to potentially then come back down from there. Right, that's what I'm anticipating. Nothing is guaranteed. We know that much, that nothing in the markets is guaranteed, guys. Always fucking remember that. Nothing is guaranteed. So for volatility 75, I'm just gonna say that this is what we're looking at for now, and I will update you guys as you know trade progresses. Okay, now. So basically, we just got stopped out, and the reasoning behind this, I'm gonna take time to break it down for you, Oaks. So, if you are paying attention at the beginning of the video, scroll up to the 15-minute time frame. Excuse me. If you are paying attention at the beginning of the video, right, this trade that we took was a little bit of a counter trend trade by virtue of the fact that, well, if we go up to the higher time frame, damn, you know what I mean? If we go up to the higher time frame, we have that situation where now price is generally on a downtrend, right? Because before this week, before this data, price had created that high over there. Where's my pen? See, price had created that high over there and had created this low and that low. So when these lows were created, right, you are either expecting for price to continue to the upside when it reaches here, which it failed to do by virtue of the fact that it just continued to the downside. So we know that price is on a downtrend by virtue of the fact that we see it going from there to the bottom to make a pullback to then continue to the downside. So low, lower low, oh, that's a high actually. High, low, lower high, then lower low. So in this regard, reason why I bought here is because I'm essentially assuming that price is going to quickly rally to the upside, continuing or rather reversing to go to the upside, to either come to this area to create a lower high to then continue to the downside, or to see it continue to the upside and create new structure by virtue of running through these previous highs, which is basically sell side liquidity that's been resting here. So sell side liquidity that's been resting here, we come, we take it out, and then yeah, we basically witness price continue to the upside. But then again, that did not play out, or maybe it didn't play out in the time that we had expected, because as you just witnessed a couple seconds ago, we got stopped out by virtue of the continuation of the bearish trend that was already established, right? So you saw on the 4-hour time frame that we had that expansion, then the retracement. On the 1-hour time frame, that expansion and retracement is a lot more clearer, because well, now you can see expansion, retracement, expansion, retracement, young tall, and then expansion, and then, well, this was technically supposed to be a significant retracement to the upside, but clearly it was not. It's really freaking frustrating, but you know what? It's the life of a trader. I chose this life. So right off the bat, we already know that on the 1 hour, on the 4 hour, we are bearish. So when I took this trade on the 15-minute, or based off of a 15-minute confluence, it was off of the idea that, well, since we've already established this bullish run over here, maybe these two, well, let me zoom in proper, yeah. So my thought pattern basically behind this buy entry that I took over here was that, yo, seeing as price has already been on this uptrend over here, right, we've broken back into the structure by virtue of that break, retest, and continue to the upside, right? And now we've also broken this previous high and that previous high. This doji over here for me was basically a retest and pull back into that previous high, to then allow for us to possibly test this sort of area over here, just to show you, right, what I'm talking about, because I'm speaking but there's no visual representation. Lovely stuff. So that's why I put my stop loss below that, because like I'm saying, right, when price reached this area over here, price then quickly came back. Oh, this is actually a significant area, eh? On the lower time frame, it's significant. It's not significant on the higher time frame, but bear with me. So as of on the lower time frame, right, we have this pattern that's forming, or we have this price action that happened over here, where price came to this area once, went to the downside, came to this area a second time, went to the upside. it's been choppy ever since, right? But for the fact that we saw it go down that first or that last time, when we saw it come back here, right, it shot to the upside and then it left over this doji. So when I'm seeing price pull back down here by virtue of these two white candlesticks, and then we have these black candlesticks that formed, I'm thinking that maybe, just maybe, there's still bullish presence in the market to allow for us to then continue to the upside. Because as you can see, right, this was subliminal. I didn't even mark out this area, but I could see that there was a higher than not potential to continue to see price go up to the upside. But clearly, we were wrong, and that was not the play this time. So, reason why I think the play didn't play out the way that we expected is because there are still plenty of sellers resting at this area, as we can see by virtue of that bearish volume that stepped into the market shortly after we entered. Right, so we basically witnessed price rally to the downside, and well, yeah, that just might have been one of the shortest trades that I've ever taken. But you know what? It happens. This was me attempting a counter trend trade. Right, this was an attempt at a counter trend trade, and well, it did not play out the way that we expected. But like I'm saying, it's life on the charts, and yeah, I really hope you enjoyed this video. If you took any value from it, then yeah, congratulations. But I just want to leave you with this one thought before you go anywhere, is that, you know, sometimes the market will play out in your favor and sometimes it won't. The best thing you can do is just to keep your cool at all times when it's playing out in your favor and when it's not playing out in your favor. So in this regard, we're keeping our cool because the market did not play out in our favor. We knew that there was something that was going to happen, but we didn't know exactly what or how it was going to happen. And well, it happened. So I'm not going to hold you guys here any further. Enjoy the rest of your day or night whenever you're watching this. It's been real. It's been dawn on your screen, and I am signing out. Damn, bro. That's tough. I gotta update them in the chat. Like, yo, gents. Clearly we were wrong. Man, them were wrong, fam. Man, them were wrong. You know what I mean? Got a little too excited there. We got raided, man. Palm trees, beach views, or ordinary day. I stopped out. Not surprised. I stopped out. But we not surprised. But at a high. We took a high risk entry. And we paid the price. Issue. But on any other given day, this setup would have played out though. I genuinely believe that. On any other given day, the setup would have played out. Because it's just like what I'm saying here. Look at this instance, right? Look at this instance where we had that doji form right after leaving the area. Excuse me. Right after that doji formed after leaving the area. But in this instance, no. My point is not valid. Let me look for another instance where in this regard you bought instead of selling. So yeah, just like here, you understand that if I bought here after seeing two black candlesticks, just like we did on the other side, at the high of a area, I could have easily bagged the same move. But I'm doing this just to show you guys that, yo, bro, like, it's genuinely just a condition sometimes. See, I had my lows set like somewhere like here, and where we wanted to see price get all the way to here. So you can see that, no, man, it's the same thing, bro. Literally, it's the same thing. See, we bought at that high over there, and price shot up. So that's what we wanted to do in this instance. We bought at that high over there, and we anticipated to continue to see price shoot to the upside, right? It didn't happen, which is why I'm telling you guys that sometimes it is going to happen that your setup plays out and you get to go home a happy motherfucker. But in this instance, well, like I'm showing you that sometimes it just doesn't work out, and you have to accept that today was not your day, man. All you need is one trade. Just one trade, bro. All you need is literally one trade. So hence why I'm telling you guys that the word for today is just yours. Keep your cool, man. Don't sweat when things happen. Don't sweat when things get out of control. Just keep your cool. Cause like you saw over here, in this instance, if we were to take that trade just as price was continuing to the upside, right? Someone would have called us crazy. Someone would have called us bonkers, because a price is already at a high, and you know what, you must be looking to sell because price is approaching a previous high. No, motherfucker. If there's bears, if there's bulls in the market, I'm rocking with the bulls, continuing to the upside, going to the next area. But in this instance, that didn't happen. So I hate to keep running around the tree and repeating the same thing, but there we go. Sometimes it's not your system, sometimes it's the conditions. Don't be hard on yourself. Remember that this is a game of probability, and you gotta roll the dice to pay the price. Or you roll the dice and you pay the price. You can't roll the dice without paying the price. So it's been real. Double D. And I'm signing out, guys. I'm still learning how to do this thing, you know. You'll forgive me. I should end the stream. Yeah, end the stream.